This is the United States Energy Association Power Sector Podcast, sponsored by global energy law firm Bracewell, LLP. I'm Herman K. Trabish. I've covered the power sector since 2006, and I currently report for Utility Dive. In this episode of the podcast series on natural gas, we're going to talk to Aaron Burke, Senior Specialist of U.S. Thermal for natural gas power plant developer Capital Power. Aaron is going to get into the natural gas sector's current demand and prices, the impacts of natural gas exports, and other key industry issues, and Capital Power's strategy in response to the issues at hand. Before joining Capital Power, Aaron was an operations analyst engineer and natural gas portfolio manager with the Northern Indiana Public Service Company. He was also a senior associate for natural gas industry powerhouse Invenergy and a business consultant on resource management with electric utility as Arizona Public Service. Aaron, Capital Power is one of the giants in the natural gas power plant business. What are the scope and focus of its holdings? Where are Capital Power's plants? And in general, what is Capital Power seeing and how is it responding with natural gas power plant deployment as concerns grow about meeting spiking electricity demand?
Hi, Herman. Thanks for having me on. Capital Power's holdings are spread across the US and Canada, approximately 1 gigawatt of wind, a small amount of solar, and 11 gigawatts of natural gas generation. Capital Power sees the need for deployment of additional natural gas plants to support the energy transition and spiking electricity demand. Natural gas plants would act as a capacity resource to firm intermittent generation and provide energy around the clock for data centers that require 5/9 reliability. So we
Okay.
see it as a critical part of the changing infrastructure.
Yeah, could you? That's a really important point, and I haven't heard anybody bring it up on the podcast. How do natural gas plants uh, do what you just described that they do to balance intermittent resources? They can. It has something to do with the fact that they can certain kinds of natural gas plants can start up really fast or operate at a very low level and then ramp up really quickly as the renewables might be fading out because a cloud cover comes over or the wind slows down. Is that correct? Could you break that down a little bit?
Yes, there's various types of natural gas power plants. You have simple cycles, which could be brought online in as little as 10 minutes, and they're well positioned for load following to help manage the duck curve and net load uncertainty. And net load meaning the demand net renewable generation. And there's also combined cycles, which are more efficient. They are a simple cycle with a steam turbine on the backside of it that uses the exhaust gas to recover some energy. Those are also very flexible when you compare it to something like a coal unit, which is not designed to ramp up and down and load follow as aggressively as a natural gas unit. And also, a natural gas combined cycle plant may not be as quick starting, but can start up in an hour or two compared to a coal fire power plant, which could take a day or more.
All that flexibility is why really coal has become a fuel of the past. Natural gas has grown it has it has less emissions under certain circumstances. There's some controversy over that, of course. Um, but it definitely, and you mentioned a load following to respond to the duck curve. Let's just break that down really quickly. The duck curve means that in the middle of the day, demand falls off as renewables supply more energy. But then as it gets dark and there's no option for solar, the demand that it needs to be filled by natural gas plants rises, and you can get those plants going to follow those changes in load, right?
Yes, that's correct. And as there's getting more penetration of renewables, that duck curve gets steeper and steeper, and it also shifts the normal peaking hours of the day. Where historically, before there was a lot of solar penetration, you might have peaked at 3 or 4 o'clock in the afternoon. Now, for example, in Arizona system, they peak at 7 or 8 o'clock at night during the summer when as the sun is setting and it's still 110 degrees out.
Exactly. So um, let's look ahead for a few minutes. I'm going to move on to a new subject, Aaron. I want to look ahead. What is Capital Power's outlook for natural gas demand and prices, near term, long term? What's its outlook for power plant growth? And crucially, I hear a lot about this these days. What's happening and what do you see coming in terms of the supply chain in building natural gas power plants? And those are all factors that are changing all the time. So, how does a company like Capital Power develop an investment strategy with all the uncertainty that I think you're about to describe in prices and supply chains?
Capital Power strategy is they're looking particularly at midlife assets that are potentially undervalued, and we could add value with our operational expertise and commercial expertise to extract value out of existing plants. And we are also looking at developing new plants wherever possible, to feed into this growing demand for gas-fired power plants. There's also huge supply chain issues with the renewable transition and the data center boom. Large tech companies are paying a premium to procure available equipment, and power is a critical path for data center deployment, and being online earlier is a competitive advantage. So we're getting a lot of feedback from data centers and other customers saying they would like to be on yesterday and have as much power as they could possibly get. And we're seeing orders of magnitude of gigawatts for data center deployment, where you could have one data center consuming over a gigawatt of power, which, from my prior experience in the industry, seemed amazing to hear that one facility could consume a gigawatt of power just for computer simulations.
I'm just curious, Aaron, you mentioned earlier that Capital Power also has some investments in wind and solar. Um, do, do does that indicate a direction that Capital Power is going in? Is that something we can see you expect to see more of? I know you just made a $2.2 billion investment in some existing natural gas plants in Ohio and Pennsylvania, and I'm sure that has something to do with meeting this data center demand. But does Capital Power intend over the long term to put more into wind and solar? And as part of that question, I want to bring up the idea of greenhouse gas emissions. Does Capital Power understand the need to manage greenhouse gas emissions, even from natural gas, even though it's, as we said, much preferable to coal?
Yeah, I can't speak to long term, out past probably 5 to 10 years. In
Well,
the
that's a
shorter,
long term. Yeah, that's a long term for most of us.
yeah, I would say in the short to medium term, our priority is building out our gas fleet, because that's where we see the most value. We are very
Mm.
cognizant of the environmental impacts. We are exploring options for carbon sequestration and other avenues to mitigate the environmental impacts. But I mean, you pointed out earlier, I mean, natural gas on a field basis puts out half the amount of CO2 as coal, and then when you layer in the efficiency of a natural gas unit, it's roughly about a third of what a coal plant does. So it's not great, but it's going in the direction, and it's something that's necessary to handle the intermittency of renewables and also the higher reliability that's demanded by data centers.
This episode is brought to you by the Policy Resolution Group at Bracewell, where law, policy, and strategic communications intersect to help clients navigate what's next. At Bracewell, we know energy. It's the industry we serve, the power behind big ideas, and the force we bring to every challenge. For nearly 80 years, our firm has helped industry leaders tackle high-stakes challenges with creativity, precision, and results. Bracewell's DC-based Policy Resolution Group helps clients anticipate what's coming so they can shape what's possible. From chaos to clarity. Learn more at bracewell.com/PRG.
Yeah. Well, first of all, I would think back, uh, near term, long term, for a lot of us here in the U.S., the last 100 days has seemed like 100 years. So, but what I think is interesting is that your investments in wind and solar and your awareness of the GHGs that do come from natural gas really create a basis for a conversation about how to deal with that. And I'd like to get further into the question of carbon capture. We've done some podcasts in the past. I think we're going to be doing more in the future. I'm going to move on, though, to another subject. Um, how have liquefied natural gas or LNG exports impacted the U.S. economy and Capital Power's bottom line? I know that it doesn't necessarily affect your bottom line directly, but there's an increased demand for LNG exports to support Europe's transition away from dependence on Russian natural gas. Has that impacted just generally U.S. demand for natural gas power plants? In other words, does that add to the demand that you have to serve data centers?
I wouldn't say it's additive. I think the challenge with LNG export facilities, and it's going to be locational or market based, but they're taking up available pipeline capacity, which is a constraint to operating power plants. Where, and in my opinion, that's one part or component of the energy transition that often gets overlooked, because historically a lot of independent power producers and utilities have relied on interruptible transportation, which worked previously when you had other baseload resources and you looked at natural gas power plants as more as an energy resource and not a capacity resource. In my opinion, as renewable penetration grows, there'll still be the need for natural gas as a capacity resource, even though their capacity factors and operations might be lower. You still need to have them online and ready and to be able to be fueled to reliably start up when you need it. And with the increased flows on natural gas pipeline systems, they're losing operational flexibility where they can't absorb a ramp or start from a power plant because they're already running full out. So there's a real need to develop natural gas pipeline transportation to support the operational flexibility of fueling natural gas resources. And some of the costs that are associated with new pipeline development are pretty high, in relative terms to what you've seen historically, where you're seeing new pipeline costs being 4 or 5 times what existing pipeline contracts are. Which, when you look at where some of the capacity auctions have cleared in PJM and MISO, they've shot up dramatically in the last few years, but that still would not be enough to even cover the pipeline transportation costs of a new pipeline build.
Interesting. Couple things on that subject. This came up very recently in my research, so I haven't really run it past you. I don't know if you have any comment on it. Feel free to skip it. But I just heard that in terms of pipelines, there's an existing pipeline in Europe that was used before Russia became a problem for Ukraine. And a lot of manufacturers in Western Europe, especially in Germany, are urging the European Union to move back to getting their natural gas pipelined in from Russia because it's a better cost factor. Have you heard anything about that, or do you have any concerns that that might affect U.S. markets?
Um, I haven't heard anything specifically about it, but I understand the rationale where you need that pipeline availability, and it is can really have a huge impact when you see the delivered price of LNG to some of these European markets, and they're also facing a lot of the same challenges that the U.S. are, where you need firm gas transportation to run your units when you need them most.
Yeah, so it's interesting. That's a completely interesting development that Western Europe, that has worked so hard to support Ukraine, is now considering, for economic reasons, going back to its dependence on Russian natural gas. But that's not really the topic of this podcast. Let me ask you a question. We've already touched on it several times, but oh, and I wanted to mention before I ask this question, Burke is working very aggressively on that natural gas pipeline issue in the U.S., isn't it?
Yeah, and that would, if you're talking about changes from administration to administration, um, you would expect that at a federal level, the permitting process would be relaxed, but there's still going to be challenges at the state and local level where, particularly in the Northeast and New England area and some other parts of the U.S. that would not want, the gas pipeline in their backyard as much as they may need it. And I think that's going to be the bigger challenge. And even under the previous administration, FERC was supportive of natural gas storage, which would also help with some of the spikes in demand and helping power plants ramp and other things. Because I think a lot of these pipeline systems historically were set up for ratable takes, meaning you take it in 1/24th increments over the day, hour by hour. And when you have we were talking about load following earlier, when you have a natural gas generator that has to start up and load follow, that really puts a lot of demand at one point in time on the pipeline, which they're not really set up to do. So if you build up additional pipeline capacity and help it back with storage, it'll help firm up things. And I think that's definitely on FERC's radar.
An emerging concept now is regulators at the state level taking up the concept of uh, merging planning for natural gas resources and renewable resources at the same time to accomplish solutions for subjects like that. But let me move on real quickly to this last question, Aaron. And I want to get the question in so you can have plenty of time to answer it if you want. Uh, Capital Power started out many years ago as an electric utility, and a lot of electric utilities are facing this increased pressure because of data center growth that we've talked about. And there's a controversy. Should data centers build their own off-grid behind the meter generation? Is that something that Capital Power is considered, literally building plants for a data center, that data center takes care of entirely by itself? Or if the data center wants to have natural gas, but also wants to have generation in front of the meter and connect to the grid so that it can take advantages of that load following of all the grid features. How do you handle an interconnection? Because if the data center uses one of your uh, natural gas plants nearby, that means it's sucking up all the electricity, and now the utility that runs that area has to build new generation for the other customers, and they have to pay for it. So it's a very tricky balancing act. You need to meet the data center growth. You also need to protect customers. Have you come up with anything that you like in terms of solution to that question?
Yeah, I think co-location of data centers, nearby a power plant would help mitigate some of the cost shifting. There could be issues too if you have an existing plant and you're taking off the grid. That creates supply and demand issues that will indirectly shift costs on the customers. But I do believe the cleanest solution would be to co-locate with data centers and have them pay for it, because a lot of the tech companies have very deep pockets where when you look at the capex for a data center and you look at the capex for a power plant, it's almost rounding error in some instances for them, because they are throwing so much money at building new data centers that they would be happily or willing to spend the money on it. So I think that is definitely a solution. The only issue to some extent is they would still want to be grid connected for liability purposes if there's any sort of unavailability of the units that were built for that data center campus. And hopefully it would, you could manage that well, so minimize the impacts to ratepayers. But that is a big issue, and especially in Arizona, there's actually a docket exploring cost shifting of data centers, because Arizona, outside of the DC area, is one of, I think it's in the top 5 for data center deployment in the US. So it's definitely a hot topic.
I think it's the biggest data center deployment in the U.S. Biggest data center demand, maybe not deployment, maybe not new data centers, maybe they've already got them, but I think it's like 3 times as large as any place else. You're right, it's a big issue. And by the way, it's a big issue at the Federal Energy Regulatory Commission, FERC, as well. They're looking into this. One clarification: when you say co-location, what you mean is the data center builds its data center, but they also build a new power plant that's attached to the grid. So they're taking care of their own needs, but they're doing it through the grid so that uh, customers still have everything they had in terms of generation available to them, right?
Well, it would depend on the size of the plant versus the demand of the data center. So, I mean, if the data center was perfectly matched with the plant, it'd be a wash. But if you had excess capacity at the plant, then it would minimize the impact. And I think that would help with, because the other big issue, especially out here, is just availability of transmission. And if they're closer and or sharing the same interconnection, whether it's behind the meter or some combination of it, it helps minimize that impact.
The other solution, the other regulatory solution to that problem, as I understand it, is creating a guaranteed charge that the data center has to guarantee to pay if it pulls away from the system. But listen, that's a little bit deeper than we need to get into today. This has been a really good conversation. I think we can leave it there. Uh, my guest has been Capital Power Senior Specialist of U.S. Thermal, Aaron Burke, and he's provided us some really fascinating insights into natural gas demand and prices, the challenges facing natural gas power plant deployment, and the impacts on the industry of the Ukraine war and other really important energy policy issues as demand spikes across the country and around the world from tech. I also want to thank our sponsor, Bracewell LLP. And as always, I want to thank our listeners for taking the time to check out the USEA Power Sector Podcast. Don't forget to subscribe, like, and share with everybody you know our quest for energy transition solutions.